million in its pre-Series A funding round led by A99 VC. It plans to deploy the fresh capital to expand its export capabilities, set up on-ground teams and offices across key international markets. Cross-border supply chain enablement company Hexalog has raised $4 million in a seed funding round that was led by Enrichsen India Capital. The fresh funds will be deployed towards strengthening its technology capabilities with a focus on building scalable, reliable and data-driven orchestration layer for cross-border logistics. Google, parent company Alphabet's market capitalization has crossed the $4 trillion mark. The company has now surpassed Apple and Microsoft to become the second most valuable company in the world. Alphabet is the fourth company to hit this milestone after Nvidia, Microsoft and Apple. Apple chooses Google to power its artificial intelligence tool, signs a multi-year deal to integrate Google's Gemini across Siri and other features. Elon Musk criticizes the deal, calls it unreasonable concentration of power for Google. Well, those are the headlines we're tracking, but on to the big news that we've been covering for you today. The Labour Minister, Mansukh Mandavia, has nudged quick commerce companies to stop marketing and branding the 10-minute delivery promise. Now, this comes after recent protests by gig workers demanding higher pay and safer working conditions. Blinkit makes the first move and drops the 10-minute from its tagline. However, 10-minute delivery has not been stopped, and there is no government order suggesting the same. Timsy Jaipuriya reports on all of the details.
Well, yes, as you rightly mentioned, what sources are indicating at this point of time is that Labour Minister Mansukh Mandavia held series of meetings with quick commerce companies to stop marketing and branding of 10-minute delivery. Labour Minister held series of meetings with quick commerce companies in the last 1 month, and Labour Minister in these meetings nudged the companies to discontinue the branding of 10-minute delivery to protect the rights of gig workers. Union Minister Mansukh Mandavia, sources claimed, has persuaded during these meetings the major delivery aggregators to remove the 10-minute delivery branding and marketing. Also, these meetings were held with leading platforms, is what sources indicated, which included Blinkit, Zepto, Zomato, Swiggy, to address concerns related to delivery timelines. Other aggregators, according to these sources, is that they are expected to follow suit in the coming days, and sources in the nutshell actually said that this move is aimed at ensuring greater safety, security and improved working conditions for gig workers. Meanwhile, CNBC TV18 has reached out to these quick commerce companies and is awaiting their responses. But yes, as of now, sources indicating that Labour Ministry has managed to nudge these companies to stop the 10-minute branding and marketing. They might be able to deliver in 10 minutes, that can still be the case. But when it comes to marketing and branding, that needs to be addressed with this nudge, is what Labour Ministry sources are saying.
All right, Timsy, we'll leave it at that. Thanks very much for joining in with that update. Now on to what's brewing today. D2C skincare brand SkinInspired has raised 24 crore rupees in its Series A funding round that was led by Spring Marketing Capital. It plans to use this money to power its R&D function, boost marketing exports, as well as hiring. Now, prior to this round, it had raised about $1.5 million in its seed round from Unilever Ventures and others. Founded in 2022, SkinInspired offers dermatologist-recommended products for various skin concerns like aging, acne, and pigmentation. For more on what this funding will mean for the company's growth trajectory ahead, joining me now is Piyush Jain, the founder and CEO of SkinInspired. Piyush, welcome to Startup Street and thanks for your time here. Briefly tell us about the Series A round for 24 crores. What is the capital for and how much of a runway does it give you now? Piyush, I think your audio is on mute. Well, if you can hear me now, Piyush, the question we were trying to ask you is the deployment of that 24 crores and how much of a runway that gives you.
Right. So the fund would primarily be used in research and development. We are setting up our own laboratory as well as later plan to bring in our own plant. bulk of that fund would also go into building team and resources and capabilities for the future. In terms of runway, it would easily help us have at least a couple of years of runway.
Got that. So a couple of years of runway thanks to this 24 crores. The funding is actually, it doubles on your previous seed round by Unilever Ventures, which was mid-2024. To give us a sense as how has your revenue and customer base scaled since that seed round? Can you share some current growth metrics on that as well?
Sure. So the revenue growth has been really promising. We have more than tripled our business since the previous round last year. And in terms of repeat rates, we are again clocking very strong numbers. Along with Unilever, we have industry stalwarts like Spring Marketing Capital and Lotus also joining in this round. So very excited to have all of them on the cap table.
Well, that's the cap table you're talking about, but also tell us about competition. I mean, brands like you compete with legacy incumbents and fast-growing D2C peers. I mean, there's competition on both sides. How do your clinical efficacy claims and, this dermatologist partnerships that you talk about actually translate into measurable market share?
So honestly, not really worried about competition. Only focus is on bringing value to the consumers. The way we look at it is whether our products are efficacious enough for the consumer love. I am pleased to share that almost most of our products have 4.5 to 4.7 rating on key marketplaces, which actually tell us about the consumer love that we have been getting. And the focus will continue to bring on efficacy-based solutions, which are safe for the consumer as well as deliver on their expectations.
So then give us metrics. I mean, what are your repeat purchase rates like? What is long-term customer loyalty compared to, say, conventional beauty brands? Any stats you could throw light on?
Sure. So if I talk about numbers, our repeat rates are upwards of 45%, which are actually very strong in terms of industry benchmarks. Even on Amazon Pie dashboard, our customer lifetime value shows a value which is closer to 2.5x versus the category average. So that is the kind of numbers that we have. We also have a lot of dermatologists prescribing us in key cities like Delhi, Mumbai, which tells a lot about the kind of efficacy and the kind of conviction that industry experts have about this brand.
It's not really converting into your bottom line growth, because if you talk about your financials for FY24, you had sales of 1.5 crores, but you also had a net loss of 1.9 crores. And that was also a substantial increase from the 26.2 lakh loss you recorded in FY23. What did you end FY25 with? And, what does the path to profitability look like now?
So the things are much better right now. And of course, it takes some time to, initially overcome the kind of capital needed to build a brand. But I think we are right there because in terms of our current financials, we have already turned CM2 performance positive, and we are very much on track for break-even in next 6 to 12 months. So things are looking up pretty much for this year.
Okay, break even in the next 6 to 12 months, and thereafter you're expecting a more sustainable profit growth.
Yes, that's right. And even right now, the burn has been limited a lot. And the growth also started increase significantly on key pockets of, core business. Our key focus areas were retinol-based night cream and sunscreen spray, which are our hero SKUs, and they are doing really well. If we look at SKU level profitability, they are amongst cash cows now for the brand, and now we are investing into new launch, and hence the burn is only on those products which are now coming new to the market.
And what are these new launches you're working on?
Sure. So we have launched Acnil, which is basically a spot corrector for acne. And in the coming month, we would be launching a serum for nail. We are also launching an under eye serum, which is India's first dual chamber under eye serum, which is meant both for anti-aging benefits as well as pigmentary benefits. And very excited to looking forward to that launch.
All right. Finally, you have this backing. You were talking about your cap table earlier. Unilever Ventures and, Lotus Herbals, their venture innovation fund. Do you see some sort of strategic partnerships beyond the investment that they've made in the company as well?
Well, too early to say. And honestly, currently, the way we look at it is purely as financial investors. But of course, one cannot deny the fact that these have been proven very strategic for other brands also. But it would be very early on for me to comment anything about their position.
All right, Piyush, we'll watch out for that one. Thanks very much for your time here today, and we wish you the best with your journey ahead.
Thank you for having me. Thank you so much.
Moving on-demand renting platform Flent, they've raised 21 crore rupees in a pre-Series A round, which includes about 17 crore in equity and 4 crores in debt. Now, this raise was led by Incubate Fund Asia with participation from WH Ventures, Twin and Bull Family Office, Stride Ventures, and others. Now, Flent, it provides fully furnished turnkey homes with zero brokerage, minimal deposit, and flexible terms. And this full-stack approach offers renters a move-in-ready home and provides homeowners with a guaranteed premium, entirely hands-off property management as well. The company now is going to use this capital to scale its team, expand its footprint beyond Bengaluru as well. So on that note, let me invite the co-founder and CEO of the company, Shail Daswani, who's joining in now. Shail, thanks very much for your time here. Briefly give us an overview of the business and how rapidly you've managed to scale since your launch, I believe, only in October 23.
Thank you so much for having me on the show. So at Flent, what we're trying to do is we're trying to kind of build the future of modern renting. And what that means is kind of just riding on top of the kind of expectations that modern India has when it comes to renting. Because if you look at how people are moving into newer and newer cities, they don't want to buy houses right away. So renting has become a very important part of their lifestyle. And we at Flent see this becoming a category that can be as big as a food delivery or ride hailing, because audience today expects instant gratification, and they're getting instant gratification in almost everything except this renting problem. So what we've done from day one, and I think it's been like about 18 months since we've started, is to completely revamp the way you would go about renting a house, right? So instead of just going to a broker, looking at 10 places, finalizing one of them, and then kind of getting all that furniture, setting up Wi-Fi, we've eliminated all of that and made renting as simple as buying things from Amazon. So you just go into our website, select a room or a house that you like, and you move in right the next day. And we've seen a lot of interesting feedback and a lot of positive feedback on how on-demand renting can actually be the future of how young India and modern Indian people would rent. Over the last 18 odd months, we've scaled to about 150 odd apartments here in Bangalore, all grade A developers, all grade A buildings. And we've managed to get about 300 to 350 odd people who've already rented with Flent. I think the supply side of the market is equally compelling in the sense that if you look at modern landlords, right? So people who are buying modern residential inventory are, sitting maybe somewhere abroad, they're NRIs. So landlords today also want a lot of convenience when it comes to renting out their place. And what we've done for them is we kind of become this property management company that comes in, we take up your house, we give you a guaranteed rental, we verify tenants on your behalf, we furnish the apartment on your behalf, and then everything for you is on autopilot as a landlord.
Sure.
So we get a lot of interest from there as well.
Shail, we understand your business model. We got that. But what's interesting from your data I see is that the average tenancy that you get is only about 14 months. I mean, why is that? I mean, I've rented for the better part of my life. That seems like a very short period to keep shifting houses. I mean, any particular trends there, and your target customer would only be the young working population?
So of course we've started with the young working population that's moving into the top 5 cities of India. But the reason why that stay duration is 14 months today is because, young people, they keep traveling, right? So I'll probably be in Mumbai for 12 months and then I'll want to move to a new rental home in a Gurgaon. And I think the only thing that's limiting our average stay growth, average stay duration right now is the fact that we're only present in Bangalore. Which also becomes, which is why the money that we've raised is also going to go into, new city expansion like Gurgaon and Hyderabad and Mumbai, because we see this as a network product. as to once you start flenting, you never go back to renting. So we see the average stay duration to be upwards of 3, 4, 5 years when the product expands into newer and newer cities. And as we scale as a company, I think we'll also start
Shell,
tapping into married people and like the different segments of the audience to then kind of see where that average stay duration
okay.
goes from.
Okay, interesting. So married people are not on your radar at the moment, but very briefly, we're running out of time. This is quite interesting, Shell. Now that you've raised this money, the plan is to expand beyond Bengaluru into Mumbai and Gurgaon. Where else will you be deploying it?
So we are creating a new product in the new category, which is why we have to put in a lot of effort when it comes to building the supply chain for a product like this. Because we furnish and design homes ourselves, a lot of this capital would also go into figuring out newer and newer supply chain ways to ensure that we're able to set up 500 homes in the next 1 odd year. So I think the second usage of capital is predominantly going to be on the supply chain side of it.
Got that. And, given that you set up the entire house and you manage the property end to end, what is the per unit cost that you incur and what is the profit you're making on top of that?
So for a typical apartment that we set up, we invest anywhere between 3 to 4 lakh rupees setting up an apartment. This could be a 2 or a 3 BHK. And we easily end up making about 4 lakh rupees a year in profits from that particular apartment. From a capex perspective, all the money that we deploy into the apartment comes back in about 10 to 11 months, and post that, whatever we make is pure cash flow for the business.
Interesting. So, finally, what does that translate into in terms of ARR, your current rate, and how you project both your top line and bottom line to grow with the kind of expansion you have planned? I mean, 350 rooms, across 140 homes at the moment. How will that expand and how will that translate into the growth in financials for you?
Sure. So as I said, we're currently at about 150 homes in Bangalore, and we do a monthly rent collection of about 1 crore a month right now. Over the next 12 months, we see this number going from 1 crore a month to about 5 crores as we expand beyond Bangalore. And of course, we'll go deeper into Bangalore as this company also scales. From a bottom line perspective, when we get to about 5 crores a month, we'll end up with a bottom line of about 50 to 70 lakh rupees a year, which puts us in a great position to then go out there and raise a larger round after this pre-series A.
Shell, quickly, if I may add a question, you peg the size of the entire market at 40,000 crores, but what is the share you think you can capture and who are your competitors in this space at the moment?
So the 40,000 crore number is the revenue potential of the company and not the market size. Because if you do a simple math of let's say just the urban renting market, that in itself is about $10 billion today. And we feel we can capture about 20-30% of the market at its scale. When it comes to competition, see, honestly, no one's building for the more affluent categories of the audience. So currently, I think we're the only player that's operating in this space. But we definitely see competition popping up in Gurgaon, in Hyderabad, as our model becomes more and more popular.
All right, Shell, very interesting thoughts there. We hope to have you back with more updates as you hit your next milestone. Thank you very much for your time here on Startup Street today.
Thank you. Thank you so much.
All right, we have to slip into a short break, but up next, global tech giant Lenovo outlines its vision for the next phase of artificial intelligence at CES 2026. That conversation in just a bit. Welcome back. You're watching Startup Street. Now at CES 2026, Lenovo outlined its vision for the next phase of artificial intelligence, hybrid AI. From AI PCs and smartphones to enterprise infrastructure, the company is showing how AI can operate seamlessly across devices, data centers, and the cloud. Their message is clear. AI is moving from demos to real-world deployment at scale. Aishwarya Anand brings us this special report from Las Vegas.
We are at CES 2026 in Las Vegas, where global tech giants are setting the tone for what AI looks like next. At Lenovo's Tech World event at the Sphere, the focus is on hybrid AI, AI that works across devices, the cloud, and enterprise systems, rather than in isolation. From personal AI agents to next-gen AI PCs and enterprise servers, Lenovo is signaling a shift from AI demos to AI designed for real-world scale. One of Lenovo's biggest announcements here is Kira, a personal AI super agent developed jointly with Motorola. Kira is designed to work across PCs, smartphones, tablets, and wearables, creating what Lenovo describes as one AI across multiple devices.
We will be bringing the Kira personal AI solution to India. So as soon as we get the necessary local approvals, it will be available for all our customers. So that should happen in a few months. And that cuts across Moto phones and PCs as well. So it's going to be pretty exciting.
That hybrid AI vision is showing up across Lenovo's hardware lineup. The company unveiled an expanded range of AI PCs, including new Aura Edition laptops and desktops developed with Intel. Lenovo also showcased a range of concept devices, from rollable laptops and gaming displays to AI glasses and personal AI hubs. How strategic is India now in Lenovo's manufacturing and supply chain, especially as companies are rethinking resilience?
So India is a very critical part of the global supply chain network. Of course, we use the India capacity to meet the local demand, and we are making sure that it's part of the overall global supply chain network. Now, growth is in excess of 20%, which is very significant, one of the fastest growing markets in the world.
As Lenovo's mobile arm, Motorola is positioning itself as a testing ground for how AI can become more ambient, more personal, and more integrated into everyday life. Motorola has unveiled its AI-powered Perceptive Companion concept device, which is designed to be a neck piece rather than smart glasses, but it is comparable to Meta's AI glasses in terms of features. Now, this comes on board with onboard camera, it has microphone, and it has a touch interface. A lot of Motorola's AI wearables at CES that has been showcased are still proof of concept right now. So what will determine whether these moves will actually be showcased to the real world? It will move to the real world.
Our plan is to bring some of these to market. I can't say exactly which ones and when, but we're still trying to figure out which are the ones that are best for our consumers and which are the ones that are going to work best with our other devices.
Lenovo and Motorola are taking AI to the world's biggest sporting stage with FIFA World Cup 26 inspired smartphones that blend premium power, AI features, and fan-focused design. Is this just a branding play, or will there be AI features in these phones that are designed specifically around live sports consumption?
Yeah, so we're working very closely with FIFA right now to make sure that we're not only delivering a very interesting material and finish of the device, but an experience on the device as well. So we will have some very specific AI capabilities. Again, we're working through them now, and so we can't unveil them yet. But we want to make sure it's a very exclusive, it's a very immersive experience for whomever is actually using that device.
Beyond consumer devices, Lenovo is also making a strong enterprise play. The company announced a new lineup of AI interfacing servers designed to bring AI closer to where data is generated, whether in data centers, factories, retail environments, or at the edge. Lenovo says this is key to scaling AI responsibly across industries.
What was one of the biggest shifts that enterprises in 2026 will feel because of hybrid AI that wasn't even thought of a year ago?
Well, we all know that for organizations, data is the fuel for AI. So in order to really unlock AI potential and those business outcomes that organizations want, the ROI that they need from AI, they need to have data in the right place. And so that is the promise of hybrid AI, to bring together the best of public AI, enterprise AI, and personal AI so that that intelligence can occur in whatever form factor is needed. And Lenovo has the broadest portfolio in the industry to be able to do that. Whether it is AI gigafactories for the cloud, whether it is enterprise AI factories on the edge or in your customer data center, or even on the device, AI PCs, other form factors like the AI brain for the robotics. Those are the types of solutions that we can bring for customers so that they can access their data and their intelligence wherever it resides.
What Lenovo is pitching here isn't just smarter devices, but AI that operates seamlessly across personal and enterprise ecosystems. From consumer hardware to large-scale AI infrastructure, CES 2026 is showing how quickly AI is moving from concept to deployment. We'll keep tracking how these ideas play out beyond the show floor. For now, this is Aishwarya Anand in Las Vegas for CNBC TV18.
Okay, and on that note, we wrap up this edition of Startup Straight. Thanks for tuning in, but stay with us. More news and updates